Hey there! Welcome to Whiteboard Invest, your number one go-to source for clear and concise investing knowledge, explanation, and news updating daily.
So, let's chat about what's been buzzing in the news lately. Now, on to Bitcoin. It's been all over the place today, starting low, climbing to $64,000, then suddenly dropping to $60,000 as we hit record. But here's the big news. Israel reportedly took a swing at Iran, with ABC News spilling the beans about airstrikes just 30 minutes ago. Talk about a bombshell. So, what's the deal? Bitcoin's price is like a roller coaster. Up 1 minute, down the next. And when geopolitics gets in the mix, like Israel and Iran, it's like investors hit the panic button faster than you can say crypto crash. So, there you have it. The latest scoop on Bitcoin's wild ride and the international drama that's keeping us all on the edge of our seats. Stay tuned, and let's see what unfolds next in this unpredictable saga. All right, let's chat about some other news I've got lined up. John Williams, from the New York Federal Reserve, shared some thoughts today. Basically, he hinted they're not rushing to raise interest rates unless they really need to. But here's the twist. While the stock market was taking a dip, Bitcoin just kept climbing after Williams spoke. Seems like Bitcoin's got its own rhythm, right? Now, on to what makes Bitcoin tick. It's not your typical asset, folks. Sure, in the short term, it might flirt with other assets like gold or tech stocks, but in the long run, it's all about supply and demand. Short-term flings aside, Bitcoin's in it for the long haul. Let's talk correlations for a sec. Sometimes, when tech stocks are hot and interest rates are low, Bitcoin plays along. But don't be fooled by those short-term flings. Bitcoin's true love is the supply-demand dynamic. Short-term drama aside, in the grand scheme of things, it's all about finding that balance. So, what's the takeaway? Well, we might have to wait a bit to see where Bitcoin's headed next, but history tells us it doesn't sweat the small stuff too much. Tomorrow's Bitcoin halving event, that's the real game changer. Short-term news might sway Bitcoin, but in the end, it's all about that supply-demand dance. So, Binance has been stirring things up in the crypto world. They've decided to switch all the assets in their user protection fund, known as SAFU, to USDC. That's right, no more Tether or True USD. It's all about USDC now. And guess what? USDC is a big deal in the US, with some heavy hitters like BlackRock, Vanguard, and Fidelity backing it up. Now, why the big move? Binance is all about stability and trust. They're converting everything, Bitcoin, Binance Coin, you name it, to USDC to keep their SAFU rock solid at $1 billion. They're not just talking the talk. They're walking the walk by choosing a stable coin that's audited and transparent. Remember 2018? It was like the Wild West of crypto hacks, and exchanges were going belly up, leaving folks high and dry. That's why Binance set up SAFU in the first place, to shield users from these digital heists. They fund it with 10% of trading fees and are committed to keeping it at a cool $1 billion. But here's the kicker. They've got more than that stashed away. Just this morning, there was buzz about Binance moving a whopping 16,276 BTC and 1.35 million BNB to their hot wallet. Plus, they pulled 1 billion USDC into the SAFU wallet. It's not just a random shuffle, it's a calculated play. They might be selling off the counter to avoid shaking up the market while keeping the SAFU's value intact. And get this, the SAFU is actually sitting on $1.75 billion. But Binance? They're content with just $1 billion. So, don't be surprised if they skim off the extra $757 million soon. It's all part of the plan. Some folks thought Binance was just dumping BTC and BNB today, but it's likely they've been plotting this for weeks. They're probably selling to someone who's been eyeing that Bitcoin, all without causing a market frenzy. So, there you have it. A little insight into Binance's latest chess moves. They're not just playing the game, they're setting the board. So, Binance had a bit of a bumpy 2023, huh? Seemed like they were hitting a snag everywhere. But things are looking up. They've just snagged a full license from Dubai's Vera to get back in business. That's after nearly a year of back and forth. Looks like Binance is ready to roll in Dubai again, and there's buzz about India too. Binance is apparently shelling out $2 million to smooth things over and restart operations there. Considering the size of the Indian market, that's a small price to pay. Other exchanges like Huobi and Kraken had to halt their services there. But Binance is making moves to come back. KuCoin's already back in the game in India, setting the stage for Binance's return. If you're in India and have checked out KuCoin's comeback, let us know how it's going. In short, Binance is dusting off from last year's hurdles and gearing up for a fresh start in Dubai and India. They're playing their cards right, paying up where needed, and eyeing a big comeback. So, you've heard about CZ from Binance and the whole legal drama in the US, right? Well, there's some fresh news that's got everyone talking. He, who co-founded Binance with CZ, spilled the beans at the Token 2049 conference. She said CZ's looking at a pretty sweet deal considering the circumstances. Initially, the guy was staring down the barrel of a 10-year sentence, yeah, a whole decade, for some serious allegations tied to Binance's dealings with the U.S. Justice Department last year. But now, it seems like he's managed to play his cards right because the sentence they're talking about is just 12 to 18 months. And here's the kicker. We're not even sure if it's actual jail time or just a suspended sentence. Everyone's on pins and needles until April 30th. That's D-Day for CZ's fate. In the meantime, CZ's got it way better than Sam Bankman-Fried. While Sam was cooped up waiting for his sentence, CZ's still cruising around the U.S., albeit with a few strings attached. He can't leave the country, but hey, that's a small price to pay for freedom, right? So, mark your calendars for April 30th, folks. That's when we'll find out if CZ will be donning an orange jumpsuit or just chilling with an ankle bracelet. For those of you following this crypto soap opera, stay tuned. Hey, have you seen the crypto charts today? We've gone from a sea of green to a blanket of red. But don't sweat it too much. It's just a 2.4% dip in the market cap. Bitcoin's down by 1.6%, but it's still holding strong at $61,000 after a brief scare below 60K. You know, it's pretty wild how Bitcoin halving has turned into the talk of the town. It's like everywhere you look, TV, social media, you name it, there's some mention of it, and people are so curious that they're hitting up Google for answers, making Bitcoin halving searches hit an all-time high. We haven't seen this kind of hype since the last halving in 2020. Back in the off-halving years, no one really bothered to look it up much. But now, as we're closing in on the event, the excitement is palpable. It's not just crypto enthusiasts either. It seems like everyone's caught the halving hype. It's kind of like everyone's waiting for the ball to drop on New Year's, but for Bitcoin. So, let's sit tight and see what unfolds after the halving. Hashdex just dropped a new ad for their Bitcoin ETF, and it's pretty clever. They're playing on the whole more is better angle with money, showing off stacks of dollars and pounds. But then, they hit you with the twist. Scarcity rocks even more. That's Bitcoin's game. Limited supply, high value. It's a simple ad, but it's got people talking and searching. Even if someone's throwing shade at Bitcoin, it's all good. It sparks curiosity. And suddenly, everyone wants to know more about Bitcoin. It's like any press is good press, right? So, whether you're a Bitcoin believer or skeptic, Hashdex's message is clear. Scarcity is king, and Bitcoin's wearing the crown. Let's chat about the buzz around Bitcoin and its journey in the financial world. It's like every day there's a new interview on CNBC about Bitcoin, right? It wasn't always like this. Back in the day, if someone talked about Bitcoin on CNBC, that clip would be everywhere. Now, there are so many clips that people only check out the really special ones. So, today we had Anthony Scaramucci on CNBC, and of course he was there to talk about Bitcoin. He shared his belief that Bitcoin could reach half the market cap of gold and, in the long run, even surpass it. Everyone's journey with Bitcoin starts at different times and from different places, but it often begins with skepticism. Remember when Michael Saylor thought Bitcoin would vanish in 2013? Now, he's one of its biggest believers. Saylor didn't buy Bitcoin when it was cheap, and neither did I. We buy Bitcoin at the price we think it deserves. Scaramucci thinks Bitcoin will first reach half of gold's market cap, which is already at a whopping 16 trillion, and then go even higher. It won't happen overnight, and it doesn't need any dramatic events. Just time and easier access for people. Like with the Bitcoin Spot ETF, more money will flow into the market. And even a small percentage of investment assets moving into Bitcoin could push its market cap above gold's. On CNBC, they asked Scaramucci how he sees Bitcoin in the grand scheme of things. He compared it to Amazon in 1999. The host quickly pointed out that they use Amazon all the time, unlike Bitcoin. But Scaramucci was talking about the price journey. Amazon, before becoming the giant it is today, went through massive price adjustments. Did you know it dropped by more than 50% 4 times, with the biggest drop being 83% in 2000? Now, if someone had faith in Amazon 20 years ago and invested $10,000, that would be worth $645,000 today. That's a huge growth compared to the S&P 500. It shows that, even with its fluctuations, Amazon offered a better opportunity, not so different from Bitcoin today. We often forget the humble beginnings of now common products. When the iPhone or Uber launched, many doubted their success. The same was true for Google, and now we're witnessing a similar acceptance and diversity in the use of Bitcoin, which is becoming more widespread every day. It's a reminder not to dismiss new innovations just because they're not widely used yet. Who knows what the future holds, right? So let's talk about Jamie Dimon, the big boss over at JP Morgan. He's been on the news today, and guess what? He's still not a fan of crypto. In his latest interview, he's sticking to his guns, calling Bitcoin a scam and a Ponzi scheme. But here's where it gets interesting. JP Morgan, the company he leads, is deep in the crypto game. They've got their hands in crypto investment funds and are even playing middleman for BlackRock's Bitcoin ETF. It's like, don't just listen to what he's saying. Watch what they're doing. JP Morgan is a key player in the Bitcoin Smart ETF and has a bunch of crypto projects brewing. So, the takeaway? Actions speak louder than words. Dimon might be dissing Bitcoin on TV, but his company's moves tell a different story. They've even shared a quick clip to highlight this contrast. Dimon's words versus JP Morgan's crypto moves. Talk about mixed signals, right? He's been calling it a scam since 2014, predicting its downfall. But here's the twist. Bitcoin's still kicking, and its value. It's only gone up, adding more zeros to its price tag instead of dropping to zero. So, while Dimon's been shouting Ponzi scheme, Bitcoin's been busy proving its worth. It's a classic case of actions, or in this case, market performance, speaking louder than words. Dimon might not be a fan, but Bitcoin's not sweating it. So, we've got this new crypto bill that's got everyone talking. Senators Lummis and Gillibrand are behind it, and they're all about giving crypto a boost. The bill lets private companies issue their own stablecoins, but there's a catch. They've got to do it through a separate company that's fully backed by assets. Think of it like a safety net for your digital dollars. And here's the kicker. If your crypto fund is under $10 billion, you can play by the state's rules. More than that, you'll need a thumbs up from the feds. This could be a game changer, making companies more confident about jumping into the stablecoin pool. Remember Facebook's Libra flop? That's the kind of mess this bill wants to avoid. With clearer rules, we could see more stablecoins out there, linking more folks to the crypto world. Pretty neat, huh? Let's get into the nitty-gritty of the Israel-Iran situation and how it's shaking up the Bitcoin scene. So, the news is buzzing with reports of Israel launching an attack on Iran. It's a big deal, and it's got the whole world on edge. We're talking about a missile strike that's part of a tit-for-tat escalation between the two countries. This tension has been building up for a while, with Iran encircling Israel through various groups like Hezbollah and Hamas, and Israel isn't having any of it. Now, this kind of geopolitical chess game, it sends shockwaves through markets, including crypto. Bitcoin felt the tremors, all right. When the news hit, it took a dive down to $59,600. But here's where Bitcoin flexes its muscles. It didn't just stay down. It bounced back up to $61,600, showing that it's not just about the immediate reaction to the news, but also about the recovery. This whole Israel-Iran conflict is like a backdrop to Bitcoin's drama. It's proof that even when global events throw a punch, Bitcoin can take it and come back swinging. It's volatile, sure, but it's also resilient. And that's the full story, with all the geopolitical twists and Bitcoin's comeback. Let's talk about Telegram, the messaging app that's a big hit in the crypto world. Did you know that even with a whopping 1 billion users, they've never run a single ad? That's right. They've grown huge purely by word of mouth. And get this, they run the whole show with just 30 full-time folks. Pavel Durov, the guy at the helm, is the only director and shareholder. He's hands-on, working directly with all the engineers and designers, and they don't even have an HR department. Instead of the usual job interviews, Telegram scouts for talent through coding contests. It's like a battle of the brains where the smartest of the smart solve tricky tech problems, and the winners get a shot at joining the team. It's a pretty cool way to find the best of the best, right? So, what's the takeaway? You don't need a massive company with thousands of employees to make a splash. Telegram's lean but mean approach shows that a small, super-skilled team can have a massive impact.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.